What's up, YouTube? Listen, family, I bought a brand new stock and I want to share it with you and where I believe it is headed next, man. But without further ado, please make sure you like and subscribe. Make sure this video get at least 1,000 likes, and let's go ahead and dive into it. Okay, guys, wasting no time today. PayPal is the stock. It continues to increase its acceptance and ubiquity. It is a leader in the digital space, past Apple, past Google Play, above Amazon Pay, above Affirm, Shop, so on and so forth, guys. PayPal is the stock that, from a standpoint, guys, of the fact alone that it is so beaten down year to date, that it is so beaten down dating back to last year, I see a major move in this particular company, and you guys already know I like to get in on a front end. Okay, check this out. Current Bloomberg consensus estimates for the 2023-2024 forward PE are 12.5 times and 11 times respectively, which is well below the S&P 500 multiple of roughly 19x. The PEG ratio is also at an all-time low, and I consider that a reasonable growth rate relative to the price that it will be pre-pandemic, with the average of 3.57, assuming the strategic ventures are explored and they continue to benefit from the secular e-commerce trend internationally. Compared to peers, the enterprise value to EBITDA metric is also more attractively priced, with a 5-year mean for the sector being at 15.5 times, thus implying a price of approximately $105 from a conservative basis. Listen, guys, you already know, man, I specialize in trying to, one, put you guys into quality companies, but number two, letting you guys in on the front end of what I'm doing so that you guys can see the process of how you properly go about investing, finding quality companies that have huge upside potential. And in this particular case, this analyst projects around $105 price target from here on PayPal. Me, I see 80, and once we clear $80, if we do that successfully, then guys, we're off to $121, maybe around that $130 range. That's what I foresee. I'm going to break down the technicals as to why momentarily. Check this out, guys. Looking at their quarterly financials, revenue up 8.5%, net income up 56%, diluted EPS 62.7, the net profit margin 43% up, operating income up 55%. Check this out. This company is still one of your, not only they're the leader in this particular space, but they are also well ran. They also have a lot of cash on hand. They also have a lot of free cash flow. When you are well ran and you're just going through a rough patch, guys, that's an opportunity to get in. Okay, now with that being said, no, I do not see, for example, them having a Meta type of run when Meta was beaten down the same way this was beaten down. What Meta has done, I don't see PayPal doing quite the same. But will they have a similar type of run? Absolutely. That's how we can get to that $80 to $100 range is what I foresee. Okay, and then as it relates to FedNow, yes, you're going to have competition enter the space, but I can see them canceling each other out. I can see them impacting Apple Pay more than PayPal, if that makes sense. Okay, so don't get overly caught up in what about FedNow and that's going to make PayPal obsolete. Nah, it don't work like that. When you are the leader and you are winning by a landslide, you still, even when you're on the downtrend, other companies still have so much ground to make up even to get on your level. So again, guys, keep everything in proper perspective. With that being said, guys, let's go ahead and bring out the charts. Okay, guys, for teaching purposes, I'm going to give you a macro level lesson on today using a 1-week chart to show you what's going on. Currently, we are down here. This is where we are at. Okay, that's where we're currently at. However, you see the next level of resistance we got to get to and through is that $80 range. Okay, that's resistance 1. All right, that's resistance level number 1. We're going to call that number 1. If we can get to and through $80, which is something that I'm hoping we can get to by earnings, for example, which is August 2nd, then guys, number 2 that awaits for us is sitting right here at 121. So then we got resistance 1 at 80, and then we got resistance 2 at 121. Guys, if we can take this and go here, that would be ideal. But check it out, above 121, we are off to the races. Look at all this runway to the upside that we have in this particular move, okay? Technically, that's what's on the table. Yes, they have to execute. Yes, they have to have and continue to have decent earnings, okay? But if we get any amount of positive news, if we just stay consistent and just make the right business decisions as a company, and don't let us get the hiring of the CEO correct, guys, this play can take off, okay? So what I'll be doing, I'll be slowly building out my position at 73 and below. So ideally, I want to get this at 60, 65 range. That's where I want. So I'm hoping for a pullback, ideally, to those levels to continue to build out the position, okay? From 60, I believe this can go to 120, all right? That's what I foresee. But before we get to 120, we have levels of resistance at that $77 range, at that $80 range, and then we'll have the big battle at that $120 range, okay? And that's what's going to get us there. So that's what I foresee. That's what I'll be doing. I'll be building this out anytime under $73 and below. So $72.90, $72.70, $71, $70, $69, $67, $65. You guys get my drift? And the lower the price, the bigger my buys, the bigger my position will be, okay? And so I'm going to take you on this journey. This is not financial advice. You don't have to follow me into these things, but I'm just showing you strategically, when you are finding value, when you're finding quality, as well as something that has the potential to move up, whether it's due to earnings, whether it's due to sentiment, whether it's due to just, you know what, this has been beaten down and it's just time for a sympathy rally, whatever it might be, I'm banking on that. And guess what? I'll ride it out. I'll assess this over the course of how I do, at least 1 to 3 years, to give it a chance to hit $120, because from here, that's either a double up or very close to a double up on my investment, okay? You can't get a better return than that, and you won't get a better return than that in a bank, all right? That's just how we're going to put it down today. PayPal is the stock that is my brand new one that I'll be riding and buying and accumulating as much as I can in my buy zone, 60 to 70 to 90. Just put it like that, okay? Anywhere in that range, I want all of it, all right? And the lower it go, make a note of this, guys, the lower it go, the more you buy. So if it touches 60, say earnings come out on August 2nd and the stock drops. If it comes back to 60, I'm buying heavy. If it comes back to 65, I'm buying heavy. Does that make sense? That's how we'll put it down, okay? Listen, guys, hopefully this was helpful. We make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey, so do me a favor. Don't forget to like, subscribe to the channel. Make sure you guys grab some free stock using my link below, and I'll catch you guys in the next one. Peace.